All right, let's try out a Chapter 1 table problem. This problem we're going to take a look at is what I would call a table problem, and this is the goal of Chapter 1, to be able to do a problem like this. I've created a nice short one here, but it is very comprehensive because you're recording the transactions and then creating an income statement, owner's equity, and balance sheet. All right, let's start with transaction 1. The owner invested $50,000 cash in the business. We're going to make a debit to cash. Cash increases, and the capital account also increases. You could put plus signs next to those numbers. We're really trying to keep track of increases and decreases. There's a remarks area for any transaction that affects owner's equity. And on this first one, it's owner investment. Transaction 2, the company purchased $6,000 of equipment on account. Find your equipment account. It's on the right portion of the assets. Going to show equipment going up by $6,000. And they purchased it on account. So over in the accounts payable, that's a plus $6,000 for accounts payable. Your equal sign is actually right here. So we have to make sure that every transaction is balanced. You can see that we are currently in balance. Transaction 3, purchase supplies for cash. The supplies go up by $2,500. Cash is going to go down by $2,500. Fourth transaction, company paid rent, $1,000 in cash. Rent is an expense, and we're going to show a negative $1,000 because expenses affect owner's equity. So a subtraction of $1,000 from the capital account, and a decrease in cash, $1,000 as well. The remark would be on this one, rent, expense. Transaction 5, company performs services on account. So this is going to be accounts receivable, a plus $4,000 there on accounts receivable. And over in owner's equity, this is revenue, $4,000 to the capital account. And we're going to say service revenue. So service revenue. All right, so accounts receivable and capital both go up. Last transaction, the owner withdrew $500 cash for personal use. I'm going to subtract that from the capital account, minus $500. And let's reduce cash by $500 as well. And the remark would be owner's drawing. So on those remarks, it's only the ones where the capital account is affected. So you can see the effects are owner puts money in, the rent causes capital to go down, service revenue causes it to go up, and a drawing causes it to go down. We should total up each column here, so our cash is going to end up at $46,000. You should verify that. Accounts receivable ends at $4,000. I'm just adding up each column. Supplies, $2,500. $6,000 in the equipment account, ending balance. On the other side of the equal sign, we have accounts payable, also $6,000. And if you add up the pluses and minuses to the capital, it will be $52,500. And normally in accounting, we double underline those balances. There we go. Let's do some quick financial statements. First of all, we want to do an income statement, And on the income statement, we need the revenue. Where would you look for the revenue? Well, it's over in the owner's equity, and the service revenue was $4,000. Actually, it looks like I called it consulting revenue here in the statement. You would choose one of those titles. The rent expense, only one expense, it's $1,000 for the rent expense. Subtract the expenses from the revenue, net income, $3,000. Then we do the second statement, owner's equity statement. The beginning capital was $50,000. That's what the owner invested at the beginning. We add in the net income of $3,000. You subtotal that, you have $53,000. The owner took a drawing of $500, that's going to be a subtraction. Capital ends up at $52,500. This should match what you see at the bottom of the capital account. It's actually right here. That $52,500 should match this $52,500 right here. Let's finally do a balance sheet. Total of cash is $46,000. Accounts receivable ends up at $4,000. We're just going to go across the bottom of that table and pick up the balances. Supplies, $2,500, and equipment, $6,000. If you add these up, you'll get what we call the total assets. It'll be $58,500. Double underline that. We also like to put a dollar sign on these financial statements. That's a good idea too. I usually put one at the top and the bottom of each statement. Your accounts payable now on the balance sheet, $6,000. And the capital, we use the final balance. That final balance actually from the statement above. We move that $52,500 to the capital account on the balance sheet, $52,500. Add the accounts payable and the capital. We end up at $58,500. Double underline it. Dollar signs, top and bottom on that column. And notice that the assets on the left, $58,500, are equal to the liabilities plus the owner's equity. There is a very fast run-through on a pretty comprehensive problem. This is the goal of Chapter 1, to be able to do a problem like this. Take a look at the sample table problem at the end of Chapter 1. You'll see it's just a larger version of the one that we just looked at. All right? Thanks for watching.